Heikin Ashi is a very useful candle type that is very popular among new traders. It was made by Munya Hizahoma in the 1700s, so it's really old. Heikin Ashi means average bar in Japanese. You can tell by the name that the Heikin Ashi averages price data to create candles that appear smoother than the normal candlesticks. Heikin Ashi candles filter out market noise. Less market noise will help you spot the trend and reversals easily. On TradingView, this is what the Heikin Ashi candles look like. If we compare it with the normal candlesticks, we will see how smoother and cleaner the price action looks with the Heikin Ashi candles. Candles on the normal candlestick chart change direction frequently, but that's not the case with Heikin Ashi. That's because Heikin Ashi averages price data. Heikin Ashi can be very useful for new traders to find the direction and strength of a trend. And finding the direction and strength of the trend is very easy with these candles. If a Heikin Ashi candle has no lower shadow, it indicates a strong uptrend. Furthermore, a Heikin Ashi candle is green in color. It indicates an uptrend. Size of the candles also matter. If the green candle is bigger in size relative to the other candles, it indicates a strong uptrend. And if the green candle is smaller in size, it indicates a weak uptrend. And if a Heikin Ashi candle has no higher shadow, it indicates a strong downtrend. Furthermore, a Heikin Ashi candle is red in color. It indicates a downtrend. Like I said, size of the candles also matter. If the red candle is bigger in size, it indicates a strong downtrend. And if the red candle is smaller in size, it indicates a weak downtrend. Sounds easy, right? What if the candle has shadows above and below at the same time? If a Heikin Ashi has shadows above and below at the same time, it indicates an indecision or range market. After a series of green Heikin Ashi candles, if you see a candle that has shadows on both sides, it indicates an indecision. Similarly, after a series of red Heikin Ashi candles, if you see a candle that has shadows on both sides, it indicates an indecision or range market. Now there are different strategies around Heikin Ashi candles alone. The basic Heikin Ashi strategy is to buy when the Heikin Ashi gives a strong uptrend indication after a series of red candles, and sell when it gives the strong sell indication after a series of green candles. Any trader with a little bit of experience can tell that this kind of strategy alone can't produce profit in the long run. If you buy and sell every entry signals, there is a high chance that you will blow up your account eventually. If you don't buy and sell at every color change of the normal candlestick, why would you enter trades at every color change of the Heikin Ashi candles? The best use of Heikin Ashi is at the support and resistance levels. You can also use it with indicators that you know work. Here's the proper Heikin Ashi strategy that you should use. If a price is at a resistance, you can enter a short trade when the Heikin Ashi candle indicates a strong downtrend for the first time. Similarly, if the price is at a support area, you can enter a long trade when the Heikin Ashi candle indicates a strong uptrend for the first time. In both of these examples, you can set your stop loss using the ATR indicator. I have already made a video on how to use the ATR indicator properly to set the stop loss. Check it out if you want. Another good strategy is to use Heikin Ashi candles with indicators that give entry signals. I have tested many different indicators 100 times on this channel to show their real win rates. One of them was the MACD indicator. MACD had a good win rate. So you can use that indicator with Heikin Ashi to create a better strategy. If the MACD is giving a sell signal, wait for the Heikin Ashi candle to indicate a strong downtrend. Similarly, if the MACD is giving a buy signal, wait for the Heikin Ashi candle to indicate a strong uptrend. If you don't know anything about the MACD strategy, check my MACD video on this channel. MACD strategy is one of the best trading strategies out there. Heikin Ashi is great when it comes to identifying trend direction and strength of the trend. If Heikin Ashi is so easy to understand and easy to use, why most of the professional traders don't use it to enter their trades? Well, to answer that question, we will have to look at the advantages and disadvantages of the Heikin Ashi candles. Let's start with the advantages. Number 1. With Heikin Ashi candles, anyone can easily identify the trend direction. Furthermore, Heikin Ashi also shows the strength of the trend with the size of the candles. Number 2. Heikin Ashi candles averages price data, making price action smoother and easier to read. Number 3. Heikin Ashi is very good for new traders as it removes market noise from the chart. Number 4. If you entry trade, you can stay in it for a very long time if the Heikin Ashi is not indicating any weakness in the trend momentum. Now let's look at some disadvantages. Number 1. Heikin Ashi averages price data. Therefore, some price data is lost with averaging. In simple words, you are missing out on some important price action data that you would see with the normal candlesticks. Number 2. Since Heikin Ashi averages price data, the close of the Heikin Ashi may not reflect the actual closing price of the assets. This could be risky, especially if you are new to trading. Number 3. Heikin Ashi is a lagging indicator. It will react to price movements very slowly. In other words, you will get late entry signals. That's why most of the professional traders won't use the Heikin Ashi as an entry signal generator. It is too slow. With Heikin Ashi, you will enter trades a little bit late. This can be annoying to few traders who trade with bigger account, since they will miss out on some good money. Number 4. Since it is a lagging indicator, it is not good for short-term and scalping strategies. It works best only on higher time frames. Number 5. Heikin Ashi does not show gaps. If you trade stocks, you know how important gap opens are. They tell some important information about the assets. Heikin Ashi simply smooths out all the gaps, so it is not ideal for most stock traders. Since gaps don't appear on Forex that frequently, Forex traders have to worry less about the gaps on the chart. Like I said before, Heikin Ashi is good for identifying the strength and direction of the trend. You can use to identify weakness of the trend at the support and resistance levels. If you want to enter a long trade at a support level, you can wait for the Heikin Ashi candles to show weakness or trend reversal sign at your support levels. And once you are in trade, use Heikin Ashi to analyze the strength of the trend. If the strength is not weakening, you can stay in the trend for a long time. That's all. Now you know how to use the Heikin Ashi candles properly, and the reasons why most people use normal candlesticks. Usually, I test almost every indicator I show on this channel 100 times. Since closing price of the Heikin Ashi candle is not the real closing price, I cannot back test the Heikin Ashi as an entry signal generator. The indicators that I test 100 times on this channel look exactly the same while back testing and in live markets. On the other hand, real closing price of the candle does not appear in past candles. But Heikin Ashi is great when it comes to analyzing trends. Like the video if you liked it. Hit that subscribe button, and don't forget to ring that notification bell as well, so you don't miss any future videos.